Welcome to the Turnaround Take. I'm Joe Sarachek, and today I'm joined by Igor Zaks, a Sloan Fellow from the London Business School with a global professional LLM from the University of Toronto, and the founder and president of Tenzor Ltd, a Toronto-based advisory firm specializing in corporate restructuring, distressed credit, and operational due diligence in complex receivables, finance, and fintech platforms. I'll just say I found Igor because we're buddies on LinkedIn, and I found his comments very compelling. Igor's a prominent voice on private credit and fraud, which is a hot topic at the moment. And he's been quoted in the Wall Street Journal and Bloomberg on the kinds of situation we're discussing today, including the Carriox HPS collapse and the First Brands restructuring. So, Igor, welcome. You were recently quoted in the Wall Street Journal on the Carriox HPS situation. Can you describe what happened there?
Thank you, Joe. It's a very interesting case and quite quite surprising, although it's not the only one. So the situation there was that a prominent investor, HPS, that now part of BlackRock, invested in a receivable-based transaction with a telecom entrepreneur, Bankim Bhavan. And they financed it with over $400 million. They allegedly done due diligence, used some of the big names for due diligence, and then were monitoring routine transaction until 2 years later. They asked to have an audit. They involve another company, and they sent emails to the buyers, copying themselves to get basic confirmation this receivable was there, a sort of routine audit procedure. And by complete accident, an employee find out that the email domain from which the replies came were not email domains of this well-known public companies that receivable supposed to be. So basically, cutting the long story short, there were no receivables. The documents were fake, the buyers were fake, the cash flow was not going through a dedicated account, was basically going through the borrower, and the whole thing collapsed.
So, Igor,
Uh,
do you think they started out as frauds, or did they start out legit and then the business was stressed and they then became fraudulent?
uh, Again, I don't have an information to do. I can only do a guess. My guess in their case, they started this fraud. My guess, but I may be completely wrong. And that's not, a statement. That's a guess. It's very, very difficult to see from the documents. But again, if you look even what Wall Street Journal was doing in the investigation, whatever, there were other cases with this particular entrepreneur before and some investigation into him and whatever. So it looks again from what we can see as something that was maybe it was a period when it was a genuine business, but it seems that by the time the investment was made, if genuine business been there, it was not the whole business. So that again, it's a little bit different from, for example, First Brands case, that you can definitely see an actual business. You see actual goods in Walmart, in major stores, whatever. The fact the invoices were sold multiple times is a separate question. But you definitely see some manufacturing, you definitely see some shipments, whatever. In this particular case, it's more esoteric receivables for services, and there is no proof to be seen that there was a material amount of underlying business.
So I'm going to give you a little plug and ask you to plug yourself. So if I'm an investor, investment fund or family office, or even a single investor, and I say, hey, Igor, I have this terrific deal, this receivable finance deal. It looks too good to be true. Can you come in and assess whether this is legit or fraud. Can you? Do you do that?
Of course, of course, that's what we do. And again, there are multiple layers. I mean, there will be probably 10 different filters that this deal would not go through. One is, again, if you are doing asset-based deal, you are relying on some third party. You expect somebody to owe you money. If I will tell that Joe owes me $1 billion, I can say it. But probably the only way to check it is to ask Joe whether in fact is the case, or to see some document that is notarized and properly certified that it shows that exists, and then also shows that Joe have $1 billion to basically give me, if he owes it, because even if he owes me $1 billion, he need to have it to provide it. So in this case, relying on a supplier to say he have receivables from a blue chip customer. And that's why I see a lot of things that we see a repeated pattern. We see it in First Brands, we see it in Green Seal, we see it in HPS Carriox case, we see it multiple times. Investors are looking and they're seeing this great thing. There is a company that generally is not worth a lot, but the receivables are from investment grade, high quality companies. Sometimes they're also insured. So, for example, in Greenfield, they were insured by a very good insurance company that obviously was able to pay the valid claims. But again, the fact you think or you tell somebody owes you money does not make this fact to happen. By the way, UC filing does not make it either. I mean, UC filing just recording towards you that you cannot give them to somebody else. It doesn't say they exist. So in this case, you first need to check the receivable exists. Second, you need to check that the party that's supposed to pay is first the party you think they are, and second are able to pay. Because if you have a huge receivable, like I remember I was doing a due diligence at some point for private equity house, and they bought a company at a very high valuation. And the first thing I look there, I see a huge customer concentration in one customer. And there was a sale done a month before the transaction was closed at a very good margin. So that's improved profit and loss. That's improved, every parameter that was there. Like within 15 minutes, we find out the company was basically a new created show. So in this case, you need to do it. And then if you look specifically at this one, the main check, there are tons of tools, real simple, real easy to do it. The other thing, again, people use an escrow account, and there is a question about cash domination and all the stuff. Like, is there a litigation on First Brand exactly on not doing it? But I would not go to an aspect of holding the money. I mean, holding the money is important. Having access to a bank account give you a bank information who paid the invoice. So you have invoice, so somebody send, okay, I send an invoice for $1 million to this company, and then you see a payment that is shown by the bank on a bank-to-bank message as coming from this company. So it's a lot of a fraud prevention.
Do you, when you do this, do you speak to people or are you just looking at data? I mean, meaning, are you like running down the receivable and speaking to the customer who's paying the receivable? In their case, it's a payable. Are you doing that level of due diligence?
Yes, yes, you need to speak to people. And generally speaking, how do you find out frauds? How do you find most of the stuff? You compare various sources and see whether they can belong to effectively the same people. So if you see the bank data, if you see the shipping data, if you see the books of one party, if you see the books of another party, if you speak to a salesperson as opposed to a finance person who can tell about relationship with the customer and what exactly they do, because these people are not trained to lie. Like if you get like an owner or a finance person and it is a fraud, they know how to lie. But
Sure.
take example of Enron. I mean, I spoke once with the guy who used to be fellow senior in Enron, but not the inner circle. He have no clue about, how the structures were done and what, Fastlaw and the other guys were doing. So if I hear a picture from him, it will be a true picture because he don't know what to say because he don't even have an idea of what was going. So if you talk to people, that's additional source. So for sure, technology is extremely important, and there are a lot of real good technology solutions, but nobody substitute people, per se.
I'll just tell you, so we were looking at making a debtor in possession loan. As you know, we have a fund called Strategic Liquidity. We were looking at making a debtor in possession loan. Wasn't a big loan. In fact, it was a 2 million-ish loan, which is way bigger than the big, way smaller than the big hedge funds will do, and bigger than, let's call it, an individual will usually do. And we said to the owner, we want to speak to your five customers and confirm your receivables. And he said no. And that was a point that just killed the deal. He said, you're going to spook them, this, that, the other thing. Well, we wanted to know, hey, is the receivable good? Are there any chargebacks? Are there any issues? Very simple. And I got to tell you, I've been doing this, restructurings for 30 years, and this is something that was always done in the old days. There was,
Absolutely.
as opposed to just using data and looking at data. Um, Question, what sectors lend themselves to this type of fraud, this receivables fraud, more than others?
I mean, again, there is an extent to which, for example, shipment of physical goods is more robust than services. And this is because you can have a document, you can actually track the shipment. Again, I'm not saying it cannot be fraud, and it is fraud, and it happened to be fraud. But at least, so to me, the general approach, more data points you have from independent places, better it is. So if you can see actual physical move, at least you know something moved. Maybe it was bricks instead of computers. Maybe it was, something, but at least somebody managed to load something to a ship and it's delivered somewhere. If you get a service, it's less proven to it. It doesn't mean that every service deal is bad. It doesn't mean any goods are good. You obviously need to be concerned with the ways of payment, because if payment are bank to bank and you have access to bank accounts, you get the whole anti-fraud and security mechanism of a bank working for you for free.
Got
And
you.
that's that. So if there is a payment by check, you never know where the payment actually happened, the payment didn't happen, whom the payment came from, and things like it. At best, the check number 25 was deposited to the bank account. So again, it's I would say again, you can say some sectors are more like construction, for example, definitely seen more fraud than other industries, for example. Some of the other things they have, and if you look at, for example, factory industries, they were always only very specialist players acting in a particular narrow sectors, because in this narrow sector, like if you want to finance the truckers, you really need to do a lot of work that other people do not need to do. But again, this is your specialty and you focus on this industry. That's what you learn and that's what you do.
Got you. All right, turning to something like sexy and topic of the moment. What's your opinion on this? Let's call it service as a software apocalypse or SaaS apocalypse, as some people
Software
are
as a
talking
service.
about it. Right.
Uh, Again, I think a lot of people just confuse and don't understand what the software is doing. Because at the end of the day, if you look at majority of these companies, there are two different parts of a business. So look at any ERP. One is a robust, verifiable system of record. You have a transaction, it's recorded somewhere, you need to do it, it needs to be audible, it needs to be secured, it needs to be very, then you get data repository. You need to have a high quality data, and that's not the data you want to keep outside. That's the data that are very private and proprietary. And then you get all the layers you built on it. So you put all the different dashboards and you put all the different BI and analytics and predictions and things like it. And what you get a lot of companies who were doing the sort of core service, i.e. system of record, security, all the stuff like it, not making a lot of margins there. And then building a lot of services on it. So if you look at people who are suffering now, these guys were considered to be AI pioneers a few years ago. You look at IBM, look at SAP, they were all spending tons of money, developing AI systems, whatever. And what they face, and now there appears to be people who are doing it much better. So if you look today at Anthropic, OpenAI, OpenCloud, all these various of Perplexity, all of these providers, they're specialists. They're doing much better job in developing models and analytics and things like it. They're not doing job, and I see no ability and no intention so far. Again, that can change, but so far, for them to go to a core system like, recording transactions, storing the data, doing all the audit trials, super robust security for the underlying data. Their job is to come on top of it and get all the different things you can do from this. So the second part is the disappearing revenue, and that's what called valuation, because everybody thought that people, and by the way, not the first time people find that this was illusion. So, for example, everybody remember IBM with the introduction of Watson saying doctors will be redundant, very, very soon because our super AI will get rid of all the needs.
Yep.
At the same time, everybody was saying you'll have a self-driving cars. And today we see a lot of doctors driving not self-driving cars. So again, it's we see adjustment, and we saw it's not the first time. Like you remember the dot-com crisis.
Of
I,
course.
I I was in technology company during the dot-com crisis. I used to work for Dell at the time. For us, was the best period in our history. We were making tons of money. Our market share was growing like crazy. Our absolute growth was like crazy. Why? Because our business model was suitable for it. We didn't have inventory, and everybody else got overstocked, them and their channel. So when we were going to a supplier of monitors or processors or anybody, it was like, we are the only guys in town. Do you want to give us a good deal? And then we go to customer that we were direct, we don't have a channel, saying, do you want to have a better screen and better processor and better memory than our competitor, and by the way, cheaper? And guess what? Our absolute growth was tremendous. So in this situation, I don't think software industry is dead. I think people need to understand where their core competences are. If their core competences were in the areas that are not good technologically, if all they were doing was, and there are companies that will be dead, same as the dot-com crisis were companies that were dead. By the way, Google and Microsoft are still there. That was there at the time and actually done quite well. But if you are trying to do substandard analytics using 20 years old technology, and that's your core business, guess what? And you don't have private data and you don't have sticky customer relationships. Guess what? It's not good for you. If you
No.
get a high switching cost, if the core business, core operations, core information, core data are sitting with you, you have your place, and then you need to find out how you partner with people who are better with you than you in other aspects and make sure it's a win-win for you and them.
Yes.
But I don't think we
Absolutely.
see apocalypse. We see a readjustment for a lot of mythology in this industry.
Question. So our fund likes to buy intangible assets. We like to buy judgments. We like to buy claims. Do some of these businesses have that type of asset? Um, is that what you're seeing? Do you see any of that?
I mean, you get it across all the different industries. For example, if you look at receivables, the biggest pool was probably credit insurers who pay the claims, related to it, get an asset, and generally sit in a huge pools of this. If you look at, for example, supplier claims, on the service, on many other things, you see them, and sometimes these companies are not very effective. So when I look at working capital management in companies that are in a very high margin business, a lot of them don't do any good job collecting because they don't bother. Like when I had a client that have a margin in single digits, they will not leave any cent on the table because their margin does not allow it. With a high growth, high margin, people typically don't pay a lot of attention. So at some point when the tide turning, they need to do a cleanups and they need help. And sometimes they have urgent cash needs, that they better get rid of things that they don't have a clue what to do and reinvest it in marketing, reinvest in R&D, reinvest it in the areas that are actually providing a good return.
We love that,
Uh,
by the way. We love those situations. And I think we're fair with people. We move quickly, but yeah, those are great situations for us.
and for me as well. I mean, because again, if you are buying assets that you are buying at significant discount or on a very high yield, the only way you can make money if you do much better due diligence than other people. And that's the service we provide to our customers. Because if you think the things are too good to be true, and you are doing as much work as other people, and you suddenly think you will see a very different result, that definition of madness. You do the same things and expect different results. So you really need to involve experts to make sure you are analyzing deeper and better than other people, and then you see anomalies because you see things that people like I'm always saying there is always a difference between prudence and stupidity. Prudence to me, if you do a real thorough analysis and put a relatively low risk threshold. Stupidity, if you are just saying no or getting rid of something just because you don't bother to put any effort understanding what it is. I like to be prudent and not like to be stupid. I mean, to extent I can.
I really am enjoying this conversation. Thanks so much, Igor, for all your insight and taking the time to do this interview. Please let my audience know where they can connect with you.
Sure, you connect with me on LinkedIn. Just search for my name. You can look at my website, tenzor.ca. There are contact details there. So absolutely.
As for me, if you're interested in staying up to date on all things distressed, please make sure to follow me. Thank you, everybody. Thank you
Thank you.
again, Igor. Thanks.